Hello everybody, how are you doing? This is your webinar WoW Trades. This is Alberto Alvarado, let's begin. Well, for the ones that are visiting this webinar for the first time, I would like to make my traditional intro about my generals as a trader. My name is Alberto Alvarado, I'm Mexican, I broadcast from Mexico City, and I have more than 11 years of experience. I started trading in 2005, and I lost my first live account in less than a month. But I realized that I really like the financial market, so I decided to take my self-education on the market seriously. And by 2007, I started gradually having the rewards of my efforts, learning and generating experience, just to see my account again evaporate in 2008 due to the financial crisis that we all know. After that, I had to decide whether to continue or to leave the forex markets, and I decided to continue. But what left me the 2008 crisis was that what I thought it was my edge was not complete. So I decided to add some subjective intuitional elements to my trading, and that ended up working very well for me. Besides that, I use typical technical analysis with the free tools, RSI, MACD, Bollinger Bands, etc. I keep up with the news, the fundamental news. I have no kind of super degree in economics or something. I just keep up with the news. And what you see here is the result of all that. For the ones that haven't subscribed to my YouTube channel, I strongly suggest you to do so, because we're going to start updating what we will start doing during the webinars there, since my English webinars are in a weekly basis. Of course, at times it happens things that we need to adjust before the next webinar, so be sure to subscribe there. When you receive your email with a recording of this webinar, you can calmly go there to YouTube, look in the search box, type this, I have the String Room channel. This shows up and you click subscribe. Don't worry, you don't have to do it now. Now just enjoy the webinar, and when you receive the recording, then you can then subscribe to my channel. Well, first of all, unfortunately last week I was not able to broadcast due to some health issues. But well, I am here now, safe and sound again. So it's I'm very happy to continue with my usual webinars. What we're going to talk about very basically, because it's not the objective of this kind of webinars. I am sure that you have seen the reaction after yesterday's Trump was the first time addressing to Congress for the first time as president. And even though his speech is pretty much the same as he used to deliver when he was running for presidency, giving few details on the supposed super tax reform he was going to promote the first 100 days of his presidency. He is not giving more details on any kind of NAFTA renegotiations. He's just saying the same things on immigration. So we don't have any objective knowledge after his speech. The only thing that appeared during the speech of Donald Trump in the Congress is that apparently from the outside you see some kind of union in the Congress towards the president. We need to wait and see if this continues. Firstly, we have to remember that the fears of the market when Donald Trump was elected is that the market started having second thoughts on what this president could start promoting against the free trade, for example, if he really wanted to isolate or kind of isolate the American economy and do some experimental tweaks to the economy that could hurt the long-term evolution of the United States. But apparently, what the markets have realized already is that things are going to stay pretty much basically the same, because I guess that Donald Trump just realized what it was obvious, that things are not that easy to change. Overall, when you have good results, the latest data by the United States is showing us that. So when something is not broken and you want to fix it, you will find a lot of resistance from the economic forces because they don't want to tweak things that are working, right? So I believe that this bullishness that we've seen in the dollar is a reflect of that, besides because apparently the markets were expecting some kind of hostile comments against the Fed and against Mrs. Yellen, but that didn't happen. That really didn't happen. So the market started reading that like, okay, the Fed will continue doing its thing, and what the Fed is looking forward to is to start increasing gradually the interest rates through the next 4 years. So the markets are, and I said this during other webinar deliveries, that the markets, until they find a way, until they found a way to feel comfortable again under Trump's administration, the capital flows we're going to start flowing in from safe havens, and this is what we're seeing now. Conclusion: the speech is reflecting that even if this Donald Trump wanted to convince everybody, the status quo continues, and the things are going to continue being done more or less the same way they've been done for the latest 4 years. So the risk appetite is increasing. Besides, we need to understand that when you compare the United States evolution in the economic side, even though it's far from what it was maybe 10, 15 years ago, is by far the best performing economy again. So that is why the markets were eager to find signals that they can rely and trust that things won't have any aggressive shifts that could be stabilized the whole worldwide economy. So I believe that that is why we're seeing dollar bullishness in the yen. This is the particular pair that we're going to talk in the next minutes because I believe that if you've seen yen, and I believe that you've seen that because it's pretty much the best performing pair in the forex world now. This is due to the reasons that I just explained, and the other reason is that in contrast of the United States, that Donald Trump wanted, or at least wanted to convince that he was going to tweak and fix something that is not broken, unfortunately what we have in Japan is a failing economy that's been treated with experimental tweaks that are not working. So I commented this, I believe, like 3-4 months ago here in the webinar, that Japan is running out of potential solutions to the economic problems that Japan is facing. So it's a no-brainer. When you have a weakening economy, weakening currency against one that is strengthening, well, you see the reaction of the markets, like what just happened. So we're going to review some trading opportunities that I just found in the markets. I just want to remind you something. I will stress above any kind of potential payout, or if my inside goes in my favor, what I will start doing is to stressing way more the risk part. How much you can lose with if the trade if the trade fails, because this is the whole matter of trading. There's a motto in trading that says, if you take care of your losses, the profits will take care of themselves. And that is true. You have to focus on risk. You have to focus on how much you will lose if something fails, what's your maximum tolerance to something, and we're going to be stressing that in the next webinars for one simple reason. It's important that you create this habit. As a trader, there is no other way to reach your dream of maybe becoming a trader if you don't focus on risk. Risk is first. The other is something that will eventually come, whatever. But risk, how much you can lose, how much you can risk, is what we're being focusing from now on. So now let me show you my charts. And please wait me a second. I will have to stop sharing. Okay, wait me a second, please. I just have to disable something that if I don't, it starts crashing my computer. Okay, just did it. So now let's go to the screen. Well, first of all, we're going to review the Japanese yen in the weekly chart. Why? We are now in a nascent, bullish, super bullish fundamental trend in yen. The markets were just expecting the right words by Donald Trump, or at least that he stopped saying the same words that spooked the markets for the last months. Why? You can see here, this is the weekly chart in yen, dollar yen, and we have a channel up. Since 2010, this comes. I think that this is pretty much self-explanatory, right? You don't need to have any kind of super doctorate to know where this is going. And again, this is a weekly chart from 2010. So what you can expect is that the ones that are looking this chart or trading this chart are people that are not retail traders. Usually, the ones that look this kind of stuff and trade this kind of stuff are investment banks, hedge funds that are not in a rush of closing any trade this week or next week. They are playing very long-term moves based on fundamentals, etc. In my humble opinion, what I believe is that there is no, so far, such a clearest pair to trade than this. Because it's like the conjunction of two factors, like I just said some minutes ago. You have a weakening economy, running out of solutions, and you have a nascent bullish economy with explosive results like the American one. Okay, so just want to point that in this weekly chart, we see here's the 112 level. It has worked for the latest days as a good support. Okay, here you don't see that much detail. We're going to get into some other charts, but this is the context. I've been saying in other webinars that if you really want to start learning trading, you need to be able to put everything you do, either go bullish on something or bearish on something. You need to have a context. You need to have an overall outlook of why you're doing something, that if you are longing in a bearish market, the extra precautions that you need to take, or if you are shorting in a bearish market, the specific conditions of the trades that you need to take care of, etc. So, well, we just see that during the whole 2016, it made a very good bottom here, close to 105. just to shoot up at this moment, November 14, started moving up. It took a pause just ahead, 120, make a retracement, just to stop kind of on this moving average, making a floor in 112. Okay, let's move to the daily chart. In the daily chart, you see the exact same setup, but here is like more granulated. Here is the 112, as you can see. Here's the 112. And this is the latest movement, the retracement just ahead of 112 here, 120, sorry. The market decided to start losing a little bit of bullishness. And this is the latest price action after yesterday's Donald Trump's first addressing the Congress. And the market's realizing that maybe we have some other months that things will continue being done the same way as before. And here are the consequences. This is the daily chart. And the 4-hour chart is clearer. Here we have the 112. We made a good support here. We had a falling wedge in this case, just to be broken, and we're just at the top of this. So what I could expect that at least in the very, very short term, maybe we could have a kind of a retracement here, etc. But that depends on the shorter time frame price action. Okay? But because this can continue. But well, this is how good looking this is. Okay, I mean, we had yesterday, in a matter of, I don't know, maybe 8 hours, a 100 pip movement to the upside after again retesting the 112. This is what we are going to focus on. Okay, this is a 1-hour chart. The 1-hour chart is showing us this latest movement, this latest breakout. We are now just about or just retested a 114 at psychological level. As you can see, the 113 made the price to slow down a little bit, but it continued to the upside. There's a strong bullishness in this occasion on yen, okay, on dollar yen, sorry. So well, these are clue levels that I want you to remember for the next minutes. The 115, that is going to be our, at least what I believe is like where the market is heading in the next weeks. And the price that I believe that the price action won't look back, maybe in the next months, and the 113, okay? And just to give you a much more granulated, this movement, it's being bullish all the day. We're just testing the 114, so we need to wait to see what will happen afterwards, because we know that when we hit a psychological level, at least the shorter term traders are looking to grab some positions out of the table at psychological levels. So we need to see if this slows down a little bit and continues moving up. Basing all what I am just going to explain in the next minutes is based on all this, okay? Again, since this is not an alert service or trading recommendation, etc., I am only sharing you how I will face and how I will engage what I just explained. It's just my opinion. You're very welcome to ignore my comments, to ignore my my appreciations, or even to take the contrarian opinion. Okay. This is all information that I approach you to help you generate your own financial decisions. Okay. Since I just explained what I see in the weekly, in the daily, in the 4-hour, in the 1 hour, and even in the 1 minute, plus all the fundamental context, I'm going to play a bullish movement for the next month on yen. maybe it's not the best place to open a bullish trade on a psychological resistance, but there is an advantage when you have binary options like the ones that are offered by binary.com. That when you project a movement that you expect, in this case, in the next month, you don't need to be in the very precise entry point. If you are in the right direction, in the overall right direction, you could have a nice gift from the markets. Okay, so after reviewing all this, I'm going to play it this way. I'm going to open a trade in Forex, dollar yen, up and down, higher, lower. Okay, at the end time in 1 month exactly, 31st March 2017, with a barrier of 114.5. That means, sorry, that I believe that in 1 month, price should be above 114.5. In any case that you decide to share this opinion, you make your financial decision, gauging the risks, what you can lose. And the advantage of binary options is that you know exactly how much you could lose. You select it here responsibly, okay? So, well, following with that, I am selecting here the higher one. As you can see here, the stake is 4.67 when you select a payout of 10. This is how much you can lose if this trade goes against us, okay? Okay, this is the first trade that I open. The second one, a touch, no touch binary option. End time, the same. Last day of this month, 31st March 2017. Barrier, 111.5. This was one of the levels that I asked you to remember when I was explaining the 1 hour charts. Payout, the same thing. You select responsibly according to your risk. And here is exactly what you can lose if this goes against us, okay? In this case, I don't think that in the next month, the price will get back to 111.5. So I select my risk. Here is how much I can lose. You check it out. And since I don't believe that this will be touched in the next month, I select this one. The next one, again, Forex, dollar yen, touch, no touch, end time 31st March 2017. Barrier 115, payout the same. Meaning, I believe that before March 31st, the price will hit the 115, at the touch one. You check how much you can lose in this trade if it goes against. You check out this, you make your financial analysis, and if you decide to share my opinion, you can trade this, or if you decide that maybe my trades are wrong, you can take the opposite side. Okay. And this is the last one. Forex, dollar yen, in, out, ends in, or ends out. End time, 31st March 2017. I select the high barrier of 116 and the low barrier of 112.5. Payout, the same. What I believe is that in the next 4 weeks, the market will end between 112.50 and 116. So this is the one I choose. Again, before, if you decide to go with this, along with this is how much you can lose if this trade goes against. So you need to take this and consider this before opening the trade. You're very welcome, if you believe that I am wrong, to take the opposite side. I'm just sharing you how I understand this latest movements in yen. So now we go to portfolio. We will keep track of this during the next 4 weeks because as you see, the price is hitting the 114 and we can have a retracement on this price. But as you can see, our combo of trades is not aimed to be closed in the next 3 hours or 3 days. It's 1 month. And it's precisely trying to strategically follow the flow that's being compounding and gathering track and forth during all this uncertainty stage while Donald Trump was elected. Okay, so we will keep reviewing this every webinar to see how this goes and to take decisions if we will close them beforehand in losses or whatever it has to be done. Okay, and I'm very excited for the next thing that I will do because this is the very first time, and maybe some of you are not aware that binary.com offers this tool. I don't know how many of you have already opened a margin forex traditional trading account with binary.com, as you can see here. It's been quite some months it's active. So if you haven't even maybe had the idea that this is possible, you can ask binary support to tell you and to lead you to find out more information on this. Why I am excited? Because one way, in any case that, for example, imagine that all our binary options that we open goes against us. Imagine that. There is a way there are 2 ways to manage that. Either to open close more binary options in different prices, directions, etc., or using margin positions. Okay? So what I will do now is to, in any case the price goes against us from the 114, I will program a trade here that will open a bullish trade on dollar yen in a pullback. Okay? But first of all, I want you this reminder. For every 1,000 units that you open in this occasion in dollar yen, our entry will be in 113 level. Our stop loss will be at 111.5 level. That means 150 Japanese yen, 1.5 Japanese yen stop loss. In other words, in United States dollar pip loss, that would be like 132 pips of a stop loss. That means that if you want to follow this trade, for every 1,000 units, you could lose 13.18 dollars. This is the risk. You take the decision. You do your analysis. You need to be aware that when you open margin trading positions, to open a position, if you decide in the whatever direction you want to do it, that you will not have a margin call. That means that you are over leveraging your positions. Again, for more information on this, you can ask binary support, and you can send you the information, or here in binary.com site you have information about that, so they can give you some orientation on that. So, but well, just bottom line, for every 1,000 units, this specific limit trade that I will open, you're risking $13 per 1,000 units. Okay? So, this is the 5-minute chart in dollar yen. Just look at what it did after touching the 114. Yeah, this is expected. This is psychological level. And I wouldn't be surprised if maybe this sinks to the 113. This is why I am opening a trade there. In any case, that maybe all our positions in the binary option get really, really bad, we can manage to circumvent the things on opening margin positions. So here I will select dollar yen, I double click, and here I will open 1,000 units. I will select pending order. Sorry, this is in Spanish. I didn't find a way to change it to English. So, well, pending order, I will open a buy limit, a volume of 1,000 units, 0.01. Price, as it says here, 113. Stop loss, as it says here, 111.5. And the take profit target, in any case, that this hits is the 115. Again, opening this, in any case, this is opened, the market goes back to the 113. You're risking, if you allow the stop loss to be hit, per every 1,000 units, $13.18. So I put here, and that's it. If you shrink, you see here that our buy limit order is opened. Why I am doing this? Again, since we're opening this very close to psychological resistance, psychological level, even though we're facing a super strong fundamental trend, yeah, we could not discard, we could have some kind of pullback. So even though we have one complete month to see our trades, our binary option trades, maybe to fail or not, we will have time to maneuver using this. So this is only like a preliminary thing, and this is how I will leave it, okay? So, as I just said, this is the first time I use this margin forex trading tool for the webinar, and I'm really excited because this is exactly how I started trading forex, margin forex. So using both tools is something that I have liked a lot for a long time. And well, this is how more or less the webinar will start looking for in the future. Of course, if I find that it's necessary to make some kind of updates of the trades along the week before the next webinar, you will find my updates in my YouTube channel. So go there, be sure to be subscribed there. And any important thing, etc. If I decide to close a trade beforehand, etc., well, everything will be there. And first, the most important thing is remember risk. Whether you open margin forex, binary option, whatever, the blue word is risk. How much you're willing to risk, the maximum you're allowed to lose. You have to focus on that. I would like to thank everybody for being around, and Shadis for hosting and recording the webinar. And remember that I expect you next week. It's March 8th, 2017, the same time, 2 p.m. GMT time. So I believe it's pretty much for this webinar. I hope you enjoyed it, and I hope you will join next webinar and to be looking to my YouTube channel in any case that something important rises. This is your webinar, WoW Trades. This was Alberto Alvarado. See you next time.